Hey everyone, in the last week and a half or so, we've been getting huge news for Alphabet stock investors. More specifically, the news is relating to Alphabet and whether or not it's a monopoly, and the U.S. District Court ruled in favor of the U.S. Department of Justice, signaling, yes, it is a monopoly. So what does that mean for Alphabet stock investors? Does that change my buy recommendation for Alphabet stock? I'll answer all of those questions here in this important video, so let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so let's take a look at the details first. On August 5th, a U.S. District Court ruled in favor of the Department of Justice in the antitrust case against Alphabet. The ruling said that the court thus concludes that Google has monopolized the market for general search text advertising. Then, a report from Bloomberg claims that the DOJ officials will proceed with further action against Google and seek to break up the tech giant. So, force the company to split up. And what that means is Alphabet will have to sell those other parts of the business. Alphabet may have to sell parts of the business, and so breaking it up. So what does that mean for investors? Well, the Jefferies senior analyst, Brent Thill, said that it's not really a bad thing. The analyst said that ultimately, we don't believe a full breakup would happen, but even if it did, it would be good for shareholders because the sum of the parts is greater than the whole. What does that mean, the sum of the parts is greater than the whole? Well, there is this investing theory with conglomerate type companies like Alphabet that have several different businesses all combined into one. For instance, Alphabet has Google Search, they have Gmail, they have the Google product suite, they have YouTube, etc., right? They have the cloud segment, and all of that are all housed inside the Alphabet Corporation. But this analyst, Brent Thill, thinks that if you were to separate each one of those parts and break them up, that all of those individually would be worth more than what Alphabet is worth today. And I tend to agree with that estimate. And one of the reasons is because Alphabet has been notoriously loose in regard to controlling costs. They've been notoriously friendly with salaries, with hiring, with perks that they offer employees. And so they haven't really controlled costs meaningfully. And so if you think about an outside investor that's looking at Alphabet and they're looking at the different business segments, these outside investors are thinking to themselves, you know what, I can make that business more profitable. I can operate that business better than Alphabet is operating that business, and I can generate more profits from that business. So if Alphabet goes to sell any one of these segments, there would be investors that would be interested in buying that business, or other companies that would be interested in buying those specific segments, and they would feel like they can improve operations and get the business more profitable because they would be more serious about controlling costs. Alphabet, again, I'll remind you, I've been following Alphabet for years now, almost more than a decade, and they've notoriously not controlled costs. And in 2023, late 2022, they finally did a meaningful cost-cutting campaign. And even when they were cutting costs, they did so lavishly, meaning they gave out such friendly severance packages that it cost the company billions of dollars to cut those costs or cut employees or cut these jobs because they were so friendly with the severance packages. And so I'm not saying that that's good or bad. I'm not making judgment on that. Just from an investor's point of view, investors know this about Alphabet. And so with the various business segments, they feel if they were to buy one of those segments from Alphabet, that segment would be more profitable under a different management team because they would be more serious about controlling costs. Now, in regards to Alphabet's dominance, I totally agree. And it's been one of the reasons why Alphabet has been my top-rated stock to buy here in 2024, because the business is so dominant. Its market share in search is so dominant. Worldwide, they have an 81.95% of market share in search, in desktop search. That's an absolute dominating business. That, I agree, this is close to, if not a full-on monopoly when you have this much market share. And in some parts of the world, like in India, they have almost 93% desktop search market share. So they are absolutely dominant. And I understand the investigation into the company's business to come to the conclusion that it is, in fact, a monopoly. And this ruling isn't new. So Google's been under investigation for a long time now for its dominance. It's been watched since 2017. The European Commission has fined Google over 8 billion euros in antitrust cases for abusing its monopoly in online advertising. In March of 2019, European Commission found that Google violated antitrust regulations by imposing contractual restrictions on third-party websites in order to make them less competitive, and they fined the company 1.7 billion euros. So not only does Alphabet boast a dominant market share, Alphabet exercises its power. Alphabet exercises its market power to generate better deals for itself. So that's why the governments worldwide are investigating the company and highlighting that, man, this company is too dominant, and the companies that they deal with or the marketers that they deal with are almost forced to pay up because Alphabet has such strong power. Now, Alphabet is trading at a forward price to earnings of 18.58 if you look at the GOOG shares, but I recommend the GOOGL shares, which are trading at 18.4. This comes after Alphabet's stock price in the last month has fallen from over $184 per share down to $161 per share as of August 14th on this recording. So even though these headwinds to Alphabet are not great news for the company, I still like Alphabet stock as a buy. I still think the company is very attractive for long-term investors. And you can understand my thinking here. And, a lot of the companies or several of the companies that I recommend highly do have very dominant market positions. That's why I like these businesses, because they are dominant businesses. And they're so dominant, in fact, that governments are looking to break them up or slow them down or stop them in some way because they're doing such a good job and their business is so lucrative. That's why I remember a few weeks back and a few months back when Alphabet was under threat because OpenAI was launching ChatGPT. And one of the reasons I wasn't so concerned with that risk is because of this risk here, is because I knew how dominant Alphabet's search engine business was. And so by OpenAI coming in and taking some market share away, it would reduce some of these legal challenges Alphabet faces. Sure, it would hurt the business in terms of some market share and revenue, but then it would help the business because then it would not have such a dominant market share and it wouldn't be criticized by regulators so intensely. And so if OpenAI turns out to be a good competitor, and what I mean by good competitor is the company doesn't try and gain market share by cutting prices, by offering incentives and promotions. It just tries to gain market share by innovating and offering a better product or service. And in that way, it becomes a good competitor, bringing in more customers that are using search more, and the company's not bringing down profitability for the industry overall. That would make it a good competitor and would ultimately perhaps help Alphabet in the longer term. So regardless if Alphabet is forced to break itself up because of these rulings or not, I still like Alphabet stock, and I tend to agree with the analyst at the beginning of the video who stated that it might be beneficial actually for shareholders because they would get so much money for selling off pieces of this business. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.